One of the things that I think is really blatantly obvious is that as we are transitioning to much more of a stronger U.S. equities market, and I believe that transition comes not from here. My belief in the transition doesn't come from here, nor does it come from here, although this is probably much more justified because that's when Powell flip-flopped and started to signal to the market that it was time to get higher. So the legit buy, I would say, would start here for anyone who really wanted to say, hey, Powell, I believe you this time. To me, there's two places where the bullishness is probably most clear. One is the first green grab candle of this daily time frame, and two is breaking above the 200 EMA. One is the first green grab candle, two is breaking above the 200 EMA. So that's where I would start to get bullish. Now, anyone out there who got bullish before that, here's what I'm going to say. If you want to be a trend trader, you actually have to be a little bit more committed, a little bit more resilient in the direction that you want to play. Hence, most of this is why I don't care about getting stopped out here or possibly soon here, right? Because I took a large sum of this. I took about 70%, I think maybe 70 or 75% of that move, because those were shorts that we took throughout the latter part of 2018 because I was committed to the short side. So to be a really good trend follower, you really need that kind of commitment, and it's going to keep you from switching too quickly, which is both the blessing if you're a trend follower with a strong trend, but it's kind of the bane if you are seeing the kind of V bottom led mostly by the FOMC flip-flopping that we've seen recently. You know, throughout most of 2018, even including the February chop, we were bullish through all this. That was not a short. Buy. So if you're committed and you know why you're willing to buy, even when the market gets choppy, you're willing to say that these are oversold levels, or you're waiting to find that oversold level with an overall upward commitment, look at what that same commitment to the upside does. So it's really difficult because a lot of traders got short here. We didn't. Why? CPI was still ticking up. We still had growth in inflation. We had just had, even though the U.S. tariffs between China had gone into effect, we still had a lot of the positive data, generally speaking, in place. So this was actually a pretty easy place to keep committed. So think about that. How committed are you to one side of the trade or the other? Now, since I'm losing a little bit of commitment, and quite frankly, until I can recalibrate, I have to go find where I have commitment still and I have price dovetailing with my macro. And that continues to be really places like Germany and France and the euro itself. So when I realize that my price action and my macro, my price action and the current movement, what I'm expecting is going to happen and what really is happening are two different things, or as my market trends are adapting to a pretty sharp reversal like we've seen in U.S. equities between December and January, I'll go to places where it's still working. Euro-US, still working, right? France-Germany, still working. Be cautious of the crude oil market. It's going to start to behave in the way that the new equities strength, at least for now, is plotting. I think we're going to continue to see probably a little bit more chop in bonds. We're probably going to see a little bit more, well, chop on the 30-year, not chop on the lower end of the yield. Okay, so think about that, which I talked about earlier. And I also want to think about where I might get long crude, where I might get long copper. I'm not as keen on being long yen if the equities markets are going to continue to rally. So these are the shifts that we have to see. We will see play out. We have to adapt to because of what's happening from the monetary policy, which is one of those main pillars for us. Once that monetary policy gear, if you will, starts to grind, I don't think we're going to end up in the A stage but I do think we're going to end up in this C stage. And if you follow this macro process, I think you're going to have a much easier time understanding why we can start thinking possibly long crude on pullbacks, long copper on pullbacks. And at some point, I'm going to have to look at whether or not the equities markets are staying above the 200 EMA and possibly getting gradually more opportunistically bullish, buying the bottom end of the range in U.S. stocks as well.